Wow. Wow. What a roller coaster of a market that we're in right now. Yesterday, the stock market went up 2%, went down 2%, closed at the lows, and then this morning it gapped up almost 2%. What is going on? Looking at the charts here on the SPY and all that fun stuff right here in this video, so make sure you stay tuned. What's going on, guys? Patrick here. Today, we're talking about the SPY, talking about the overall market, what is going on. We'll all take a look at the NASDAQ as well. If you guys haven't already, do me one big favor, hit that subscribe button. It's somewhere down there. The subscribe button, hit the like button also. Leave me a comment down below. What stocks are you buying during this time of panic and pandemonium in the markets? Or are you just sitting on cash? Let me know in the comments below. All right, let's dive into the chart here on the SPY. What's interesting is last week, I made a video talking about how I believe that the SPY would basically do this move right here. You can go back and watch it. This line on the chart right here, this yellow line that went up and went back down, this is what I drew last week. And guess what? If you look at this, how it played out perfectly. Back up there to the 440s and then pulled back down here to this low at that 415 area. And then today, gapping up massively. Look at the gap in that chart right here from yesterday's close at that 416 area. This morning, opening up here at the 425. A little bit of a dip there and then rocket ship. And if you see here on the 15-minute chart, you can see that clear gap in the chart there from the 416s up to this 422. Woo, baby, let's go. The issue right now is we are running into what seems to be some resistance here at the 427 area on the SPY. But overall, the market is still up like 2% on the day, I think, right now. From yesterday's lows to the high. Yeah, so about 2.6% on that gap up and the move higher. Hey, really quickly, yesterday I made a video talking about the Interactive Brokers Global Analyst Stock Scanner. It's really simple. It's free. I put a link down below. Check out the video. Learn more about it. Like I said, having the right tools as a trader, as an investor is always very, very important. Understanding how to find stocks, understanding where there is value in the market, and the Global Analyst will help you do that by finding some hot stocks in different sectors and different industries. I'll break it all down in the previous video that I made yesterday, but if you guys want to learn more, check it out. Link down below. Let's get back into the action. The question is, obviously, we have to wonder about what's going on over in Europe with Russia, Ukraine, and all that. So I'm sitting on the sidelines still to the sense that I'm not sure that this is exactly the moment that the market just starts to go back to all-time highs and we just start to rally like nothing ever happened. The problem is, at any moment, some news can come out about what's going on over there in Russia, and the market can literally just go from 427 down to 415 in a matter of minutes or an hour. And you can see that yesterday. Look at this thing yesterday. The SPY making a big move up to the 427s and then just selling right back down there after that move. So looking very much like it's running into that resistance right here. You can see the EMAs. The one thing that I do see is that the gapped up above the EMAs are starting to curl up here, and the SPY is looking like it wants to go higher from here. If you look at the daily chart in terms of the next resistance really on that chart is right where we're at right now at the 427, and then that 440 area would be our next resistance there on the SPY. So lots of room to the upside. So it really just comes down to, do we get consecutive days of green? Do we have 2 or 3 days of green from here? If I was looking to make a trade, I might be looking at like the 430 calls with the idea that this pushes up to the 440 the next few days. You can see how this happened back in February. You had a big rally, and then it pushed through that 427 area right up there to the 440 in only one day. So it really doesn't take a lot of time to get that type of move right now in this market that we're living in. I mean, some of these moves, like this move the other day was from 428 down to a low of 411. So almost a $27 move. If you would have bought, let's say you would have bought, 415 calls, and you get that move, that's a $13 move in those options. So you get a massive move in options. We've seen some insane opportunities in the options market right now, only just trading off the SPY. And that's something that I've been focused on, is just really watching the SPY, looking for key areas of reversal. Now, if I'm looking at the SPY, let's say like yesterday, and I see that we've touched this multiple area, this time this area multiple times, right? We've touched this area multiple times at the 415. The idea for me as a trader is I'm looking at this like, okay, if we get a big green candle and we start to push, that could be the reversal. And that's exactly what you got here. You got this push up, and then you have this resistance right here at the 419s. So for me, I'm watching the 419 call options. If I buy 419 call options here for the break, and we get a push all the way to 427, that's almost a, what, $16 move there? Or that's almost an $8 move there in those options. So if you buy, you know, options for $2 or $3 and it moves $8 in premium there, that's some serious profit that you can make trading those options. Again, same idea when we pushed up here and we broke back the downside. The question is, you know, I wouldn't be too aggressive shorting this or maybe buying puts when we are pulling back here, just because, you know, we changed the trend in terms of breaking out of this downward trend. We push up. The thing is, this is where we're buying options, right? We push up to this. We can see that we've made a lower high. So we had this high up here at the 427, and you can see we made a lower high at this 423 area. So that's kind of an indicator for me to be like, a lot of selling on these candles, lots of selling on the tops of these candles. So that's an indicator for me to maybe buy puts or to short the market at that point. If you don't want to trade options, there's lots of other ETFs and ways to make money when the market is crashing down, especially with the QQQs. Like if you're looking here at the Qs right now, this is the NASDAQ, basically. The NASDAQ also gapping up massively today, and it's at that 333 area, which was yesterday's kind of pivot high there at the 333. So now the question is, does the market have the steam to push through after gapping up this massively? Gapping up 2%, does there still, you know, fuel in the rocket ship to keep moving higher from here? Especially now right there at that resistance. But let's say you wanted to make money off the market when it's crashing down. How do you do that, right? Let's go for the NASDAQ, SQQ. This is a inverse ETF. You can see today it gapped down. Yesterday, when the market's crashing down, it rallies from $45 up here to almost $50. After hours, sitting there at the $50 area. This morning, obviously, the market gapped up massively. So the SQQ, being the short, the inverse of the QQs, the Qs, it gapped down. So this gives you guys a little idea. If you think that there's opportunity, you think the market's going to go lower and you want to buy a stock, you don't want to buy options, things like that, you can buy these inverse ETFs. If you look here at the SQQ, you know, just back there in March 3rd, it went from $40 area up there to $51. Same idea, you know, the other day we had this big drop. You had a big move from the 38 up there to 52. So there's opportunity to make money if you're trading these inverse ETFs. And also, if you go over here, let's look at TQQ. This is probably gapped up massively today. From the $42 area, it gapped up here to 45. So you got about a 10% move here on the TQQ, which is also a leveraged ETF that's following the overall market with the QQQs, or the NASDAQ, I guess I should say. So if you really want exposure to the overall tech market, you want exposure to the NASDAQ, the QQs with the SQQ for it going down, and then the TQQ for it to go up. So if you believe the market's going to go up from here, well, you could maybe buy the TQQ. If you believe the market's going to go down, well, then you can buy the SQQ. And the thing about this is, remember, guys, these are ETFs that are not meant to be held long term. You're not buying TQQ and holding it for the next 5 years. These ETFs are leveraged, they're managed, and you're looking for moves in the market, and that's when you're looking to buy into these ETFs. You're not looking to just buy these ETFs and hold them forever and hope that they go up in value, because, you know, obviously the SQQ, it might go down in value for the next 2 years if the market keeps going higher and higher. There will be opportunities for little spikes and pops and drops, but in general, this is not something you want to be holding long term. So that gives you guys an idea. You know, if you're looking to trade the overall market, you're looking to trade the Qs being the NASDAQ, and you think that the market's going to go down from here, well, then you can buy the SQQ. If you think the market's going to rally to all-time highs, well, TQQ would not be a bad idea from there. So if you guys haven't already, do me one favor, hit that like button, subscribe button. Let me know down in the comments below, what stocks are you buying during this dip, or are you not even buying stocks at all? Ooh, the $1 million question, my friends. The $1 million question.